Welcome to the chat. The essence of this lesson is for us all to recognize how to spot institutional demand and supply zones. How to spot institutional supply and resistance zones. We need to know that not all support and resistance zones in the market are encompassing of institutional orders. There are specific zones, there are specific levels where the institutions put their orders. There are specific zones on the chart where the institutions where they key in their orders, and markets will always go to these zones, fill their orders, and go in the intended direction. The dominant market participants, they absolutely control these markets. So on all time frames, we are going to be showing us how to recognize the levels where the institutions key in their support and resistance. For the sake of those who are beginners, let us take less than a minute to explain candlestick patterns. For those who are watching any content related to finance, forex, stock market, let's just explain what this chart we see right here in front of us mean. As you can see, price rallying up, creating series of higher highs, lower highs, and higher highs, and a cluster of green candles. Let's just mark it out in a box. These green candles, they signify buying pressure, while as you can see, these green candles, they signify buying pressure, while as you can see, price consolidating within this range with a cluster of white candles. These white candles, they signify selling pressure, while a candle that is neither green nor white, that has no color, let's take an example like this candle here. It is neither green nor white. It is called an indecision candle. Candlesticks, they are vital to technical analysis. They are part of the heartbeat of technical analysis. However, the chart can not only be read with candlesticks, it can be read with the bar charts. It can be read with also the line chart. The line chart is only encompasses the closing price of each instrument at all times. However, the candlestick, it has the most detailed analysis. It has the most detailed view. It gives the most detailed description of what happens at all time. That is why, in my opinion, I prefer using the candlestick, and approximately 99% of technical traders also use the candlestick for their technical analysis. So getting to the business of the day. On the monthly chart, institutions, they are always strategic. The typical retail trader has been taught to buy a currency when the news is good. He has been taught to buy the currency when the news is good, when the economy is healthy, when everything is fine, and when the currency is up. So most likely a retail trader is going to buy a currency when the indicators, when he has so many confluences in the direction that the currency is going up. If buying up, it means the currency is already expensive. So now let us say that we buy an Australian dollar as 0.77833, where the line is currently. It is already expensive, and we are still trying to buy it further up. Meanwhile, the institutions, they do the opposite. They buy the currency when the news is negative, when the currency is already in a downtrend, and when the currency is very cheap, and they sell at a premium. So this is the principal difference between where the institutions buy from where the retails buy, and also where the retail sell to when the institutions sell is also different, because the retail, for him, he wants to sell when the news is bad, when things are going haywire, but the institution, they would sell when the currency is up, trying to catch the top and make their profit at the bottom. So now the fundamental questions remain: where do the institutions set their levels? On the monthly chart, for you to know where the institutions set their level, you are going to look at the high and the low of the month. Let us look at the high and the low of this previous month. on AUD. We can see at the eye we have a bullish candle here, which means that the currency bought up to this level. So let us mark it. So for this particular month, this is where the institutions put their supply. So most likely price will have to get to this level before price sells down, as this is where the institutions are looking to sell around this area. Price coming to this area or break this area. Likewise, let us look at this particular month as well. Previous month, this is where they put their supply at the low, because we have a sell candle at the low, which indicates that price is in a downtrend. So as I said, price being in a downtrend and the news is bad and all, the retail trader will not want to buy at this level. You can see the Australian dollar is buying up. The retail trader will hesitate to buy at this level. He will be reluctant, he will be doubtful, he will not be confident, because he's looking for so many confluences. If you want price to break this particular resistance, you want the EMA to cross, you want the RSI to be in oversold, you want so many confluences. Meanwhile, the institutions, they have all their rules, they are not looking for so many confirmations. They just set their orders at the support and resistance level and the demand and supply level, and you can see price is buying up after breaking this level, because this is where they look to buy. So when the retail traders are aggressively selling down, the institutions are aggressively buying. I hope you can see this in play on this particular pair. Let us go to past months, so we would see how this has been playing out all of the time. You can see this month price closed in this eye right here, this particular supply zone, and you can see the next month when price got close to this zone, price started selling. Meanwhile, the retail trader will still want to buy more. In fact, if price breaks this zone, he wants to buy further up. But you can see the institutions, they are doing what? They are doing the opposite. They are selling down. So having this understanding, we are going to have a perspective into the behavior of the institutions, and are going to be able to think like them. You can see this is the low of this month. We have the sell candle here. This is where the institutions put their demand, and as price broke this zone, they started buying up to this zone. So I hope we have learned to spot where the institutions place their orders. You can see various years, you can see how it has been playing out. We have a buy candle at this eye, and you can see the institution, as price got here, they push price down before setting another level to buy price up. Let's just take a look at another pair to see. So year in, year out on every pair. In fact, let us go and check some cryptocurrencies. If there's any cryptocurrency, we can check what has happened in the past years. Wow, yes, we have some cryptocurrency here where we can look at what happened in the previous years. So I want us to take one or two examples, so you can see this particular year they put their supply within this zone, and as price broke up, you can see price started selling down before. So it is not just on currencies, even on cryptocurrencies. Let us look at the BTC USD. So the financial market is bigger than what we see on the chart. There is a game going on, and you need to understand how these players are behaving, because if you don't, I bet you are going to miss out on the great opportunities that the market always has to offer. You can see at this sell candle, price came to this level, and the institution started buying up, And as we all know, these big moves, we have big money in these moves. So it is not the retail traders that are moving the market in this direction. It is the central banks, the hedge funds, the brokerage firms, and all the big money. So I hope we now know how to spot their levels on the monthly chart. So now let's go to the weekly. The weekly is very easy. You just do the same, just the same as it has been done on the monthly. This is the dollar index. You can see a sell candle at this low, confirming a downtrend, and you can see when price came to this level, price is buying up. It is that simple. At the top here, you can see a buy candle. So you always want to see a buy candle at the high and a sell candle at the low, and you want to know that this is where the institutions are setting their demand and supply. So right here we can see a supply zone. As price came to this level, supply zone, and price dropped before it came to this their particular demand zone again. So it is very, very simple. Nothing fancy, nothing complicated, nothing complex. It's all right in front of you. It depends on how you want to look at the chart. So these levels are very easy to spot. Right here we have an institution level here. You can see this sell candle right here, and as you can see, price came to spike, and the institutions, they have started pushing price further after that. So that is what you always want to do. You want to spot their levels and ride on their coattail. So now let's just go to the 4-hour. We have checked out to spot it on the weekly as well. Let's go to the daily. On the daily is simple. Just keep repeating the same process and the same rules, and excellent results is assured. That's what you are going to get. So right here you can see a downtrend, and you see a sell candle at the downtrend right here, which is the institutional demand zone. And you can see as price came to this zone, price rejected, and price has been going up since then. So you can see on GG, you can see how crazily the institutions pushed price from this their demand zone. So that's just how they do. That's just their typical behavior. And here we also have another supply zone that is being taken out. So let us go to the 4-hour. We are not going to be taking so much of our time. Let's go to the 4-hour to look at how the institutions. So right here we have an institutional supply. This eye we can see a buy candle. You can see as price got there, as price broke it, the institutions started selling, and gold has been rallying down. Despite the fact that gold has been in an all-time high, the institutions have created a supply within this zone, pushing price down. So let's go to the 1-hour. The 1-hour is simple. Just do the same. And see this zone, price broke it, and the institution put their supply there. So you have nothing to worry about once you understand these principles. Yours is just to follow the rules accordingly. Once you follow the rules, you can see right here we have a bullish candle at the high, and the institutions set their supply. Immediately price broke it, and price started selling down. So that's it on the M30. Follow the same rules. Here we have a sell candle at the low of this particular day, so we expect the institutions to drive price high for their demand once price breaks it. And you can see this is just on the M30. So M15, you look out for the same rules. and you can see the M15. There is a sell candle here, and immediately price broke the sell candle. You can see they put their demand and price went up. So to the M5 and M1, the rules apply the same. So as always, plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, subscribe and follow for more.